All right, guys, Alibaba just reported they were expected to make $1.37 per share in profit and generate $30.37 billion in revenue. Mo, what did they report this morning?
Alibaba reported earnings per share $1.52 versus $1.34, so that's a beat. Now on the revenue side, $29.61 billion versus $29.75 billion. And I want to show a couple of things here from their press release. Now, this is one of the longest press releases I've seen. It's a 34-page document. But let's go through this. So income from operations, and I'm more so because of what they're coming out of. I'm looking at the increase, decrease in percentages. So increase 44% year over year. I think a lot of that has to do with the COVID zero policy going away. Local consumer services for the quarter ending March 31st, order growth of local consumer services exceeded 20%. That's a pretty big number right there. Now, when we get down into their individual businesses, and I'm going to start talking about and showing the breakdown into 6 different areas. This KNow, for the quarter ending March 31st, revenue from KNow before intersegment elimination grew 15% year over year. So that's a business that was necessarily not growing at a rapid rate. Now it is again. Cloud. This one shocked me. A decline of 3% year over year. So cloud is supposed to be their big thing. AI is supposed to be their big thing. And right now, we're not necessarily seeing that take off like an AWS or anything like that. So I want to get down here into this share repurchase. Two quarters ago, I guess, whatever it was, they said that they were going to purchase up to like 25 million shares or something like that. So we repurchased 21.5 million shares, approximately $1.9 billion. They have 20.5 billion shares outstanding, approximately 19.4 billion remaining under the current authorization plan to repurchase more shares. So they're going to keep going, and that's through 2025. Now, the restructuring, this is a big thing that people have been talking about. They are going to break into 6 different areas, each area having its own CEO, its own CFO, its own governing body. I personally think this is going to unlock some more value. And look, I said this today on the morning show. They're in a situation where they grew really fast. Then they started getting into it with the Chinese government. And I said back in 2020, I think they're going to figure out a way around this. I don't know what that way is going to be. I did not picture it being this, but maybe this is their way of figuring it out and getting back to growth and unlocking growth in all of these different areas, like their cloud intelligence, like this Taobao, like their AI that they're going to be doing. So those are just different areas that I saw. And this is a big breakdown of if you guys want to go through this, there is so much in here. All you have to do is search Alibaba press release. It's going to give you all the information. This is one of the longest quarterly reports I've ever seen out there. Usually it's just a couple of pages, but that's Alibaba for right now. They are down 4%, and it's funny. They were up 2.5% at 8:30 this morning. Next thing you know, at 9 o'clock, they're flat, and then they open the day down 4%. So this just goes to show you earnings is totally all over the place.
All right, guys, so Alibaba, let's take a look at the company from the high level. Remember, yes, they did report earnings every quarter, and people latch onto these companies like crazy in their quarterly results. Guess what Mo and I say? Don't care. In fact, the only thing we care about is them doing poorly. Because if we believe in the long-term fundamentals of the business, they're going to have ups and downs. Look at every company you love, including Apple. Their revenue and profit didn't just go like this. There are ups and downs. You want them to miss. That's an opportunity for a value investor. But do you pay attention to what they're talking about as a company in terms of what the future holds for them? If all of a sudden they said, you know what, we think China, our number one market, is going to hell in a handbasket, and we're seeing that people are not, 20 years from now, are not going to be buying stuff from us. I said that extreme because that's important. Now remember, I have Alibaba shares, but you should not buy because I have that. Michael Burry has Alibaba shares. Charlie Munger had them, and guess what? He said it was his worst investing mistake, but he still has Alibaba shares. Everybody needs to do your own investing. We were trying to teach a process here. So let's talk about some high-level things for the company right now. Very little debt, about $19 billion in net debt from their market cap to enterprise value difference. They've got a 5-year PE of 16.5, 1-year PE of 50. Now their profit is down a lot in the last year, but look at their free cash flow. Their last year's free cash flow is up from their 5-year free cash flow, $23 billion versus $19 billion. but a very low return on invested capital. Kind of a concern for me, but for companies that are growing, that can be a lot lower. And plus, you see that their net income actually did drop. Look at their net income, 4.7 versus free cash flow of 23. That big difference tells me there's something on the income statement that is affecting their net income, right? These are the things I want you paying attention to, all right? Now let's take a look at their 8 pillars. All right, guys, so here are their 8 pillars. Now remember, if you have our software, if you're one of the smart people who pays $1 a day or a little over $1 a day to have our software, you can customize your 8 pillars. In fact, you can make them up to 12 pillars. You don't have to wait at 8. And with all the variations, it's literally in the quadrillions of different variations. A lot of X's here. Net income is down, even though free cash flow is, free cash flow is up $2 billion. So look at that. Net income's down $5 billion, free cash flow's up $2 billion. That should be something to look at. Shares outstanding, not a big deal. Up 1% over 5 years, big deal. This ROIC, I do want to understand that. What's the reason the ROIC is lower? Is it because they're spending so much on growth through their income statement by hiring more people, incurring more costs to grow? Maybe so.
And I wonder if when they do this split into 6 different areas, I wonder if that helps ROIC.
I don't know.
Greatly help it.
I imagine the tech portion of the business will be helped tremendously.
Yeah.
Right?
Yeah, for sure.
Look at these. 5-year PE, 16.5. 5-year price of free cash flow of 12. Guys, in my opinion, you're getting a company that's sitting here. It has a lot of growth potential because China, its #1 market, has the fastest growing middle class in the world. Now, are there concerns with this company? Of course.
Yeah.
What are the concerns, Mo?
I mean, I think China as a whole, China
Yes.
as a whole, what is going to happen over there?
It's riskier.
It's a communist party.
Becoming more and more capitalist, though.
It is. And look this is China's probably most successful company. I think they'll probably figure it out.
I do too.
Maybe that's naive, but that's what I think. I think they've done very well, and they are going to do a lot better.
So let's look at it this way. Let's look at China GDP per capita historical.
Okay.
Let's just look at this right now. 59 rows of this. Why is this so big? Let's see if we can find this. Okay. Let's just look at the year. What year is this? Where do I find the years? Okay, 2000 per capita was $959 per person. It's currently $12,500 per person.
It grows quickly.
Look at 2010.
And it's going to go even faster at this point.
2010, it was $45.50. It's a fast-growing economy. When people get the taste of wealth, they love it.
And the more we evolve into this global economy, the faster they get tastes of what happens in the United States, what happens in Europe, and that makes them want to have even better lifestyles over
Absolutely.
there. On the masses, not just the elites.
Absolutely. And that's something that's why I look at it when I say, I look at this company long-term.
Yeah.
What's it going to look like in 20 years? Now, the per capita income, it's gone from 1,000 to 12,000, 12x in the last 23 years. That's not going to happen for the next 23 years.
Right.
The bigger and bigger you are, the harder it is to grow fast. Look at the US. What's our per capita? It's like 70,000 or more. 23 years ago, it wasn't 7,000. It was like 40,000 or 30,000, whatever it was. That's the whole point of all this. You have to look at this and say, okay, what is this in the long term? It's easy to get mixed up in the quarter-to-quarter results and look at the news and China's doing this, China's doing that. They're going to fight Taiwan. Maybe they do. And if they do, my guess is Alibaba stock will fall greatly. But unless you think that's going to change the economic environment for Alibaba and China over the next 20 years, you should ignore it. Think about all the things that have happened in this country in the last 23 years. And we're still a better country economically today than we were 23 years ago. We had 9/11. We had how many elections that were fought? We had a great financial crisis. We had COVID. We had all these things happen. And guess what? We're way better.
And I look at Alibaba from, call it late 2020, early 2021 to right now. Nothing has fundamentally changed in the business.
Yeah.
After all this time, this is all noise of what's happening in China. There's nothing that anybody can point to that say this fundamentally changed in the business.
I agree with that. So let's see what analysts are saying. Well, analysts are expecting the company to make $7.80 a share this year, growing to $13.64 in the next 5-6 years. Nothing amazing, but it is low double-digit growth, okay? Revenue growth, high single-digit growth. And it makes sense that the EPS growth would be faster than the revenue growth, especially with a decent gross margin. It's like the gross margin on this company right now is 36%. By the way, Amazon is 13.5%. Okay? That's the comparison here. I look at that going, this gross margin is way higher. And I think the gross margin is actually lower. I haven't looked at the exact numbers, but I think it might be a lower gross margin than it has been in the past. Okay, and they are doing their own cloud computing, which will help that gross margin grow. So that's the whole things to look at here, guys. So what's a reasonable price to pay for Alibaba? Now, guys, remember, this is our stock analyzer tool. This is the thing that's been used 1.3 million times in the last year by our users. Most popular part, it lets you, every investment is the present value of all future cash flow. We don't know the future, but we can make assumptions, low, middle, and high assumptions on revenue, profit, free cash flow, some sort of multiple, put in your desired return, and it spits out a number. So remember, this does not include the balance sheet, but it's a good gauge of saying, where do we stand for the company? So I'm going to do a 20-year analysis. Mo will do a 10-year analysis, and we'll sit there and determine what price to pay based on what we project out in the future will be reasonable to pay today. So just hang on tight for 1 second. We'll be right back. It'll literally be a flash in the video. All right, so I did a 20-year analysis. Mo did 10. First line, revenue growth, low, middle, and high. Mine's very wide. Mo, what are your assumptions?
So I did 5, 8, and 11.
All right. I did 4, 9, and 14. Okay. 14 is very, very high, but that's okay. The reason I did that is I like doing a really high number because the stock is insanely overpriced and it's higher than my highest all of all high assumptions. I go, wait a second, we have a problem here. All right, what'd you do for profit margin?
So profit margin, I did 15, 19, and 23.
Okay, I did 15, 20, and 25.
I like it.
I sat there and said, okay, 15 and 20 is probably where they're going to be. 25, let's go higher. Free cash flow margin.
17, 22, and 27.
15, 20, and 25. I really like our assumptions here.
I went higher because historically it's a little bit higher. So PE, 16, 18, and 20.
I did 15, 17, and 19, but I don't disagree with you on that 16, 18, and 20.
Yeah.
I did lower because of the China effect.
Sure.
Same with free cash flow and your desired return.
I did 12, 14, and 16.
That's exactly what I did. And guys, I mainly did that because of the concerns with China. I need a premium for that concern.
That's literally the only reason I did it.
All right. So what does that mean in terms of pricing? Let's hit the analyze button. All right, guys, here are my numbers. I got a low price of 95, a high price of 350, a middle price of 180. That's lower than it's been in the past. And we always have wide ranging. But the whole point is, guys, this seems like a buy to me.
Especially with that margin of safety.
That margin of safety is so big. I look at this going, okay, like that's for my, but if you don't feel comfortable with China or if you don't even understand the whole world, you should not own this stock. Mo, what prices do you have?
I got 110 to 125. 225 to 265 and 162 to 187.
So we have basically the ones in the middle, the same thing.
Yeah. And we have a friend he just said, I'm not comfortable with communist parties. I'm out.
Yep. All right, guys, if you like this, you like our software, $1 per day, everythingmoney.com. Check it out. Don't be a loser. Buy it. Thanks very much. Take care.